Nobody seems to be noticing what is currently happening to natural gas, as those indicators right here are currently signaling a recession warning. To understand those latest price movements here at natural gas, in today's video, we discuss the most important technicals, fundamentals, and also macroeconomics of this commodity. We have recently seen that massive sell-off here beginning in the end of January. We've seen that retest of the lower band of this upward channel here in blue. And obviously, if you have a look at the volume delta and the RSI, this does look like consolidation. We're currently seeing that convergence here again with the RSI, and we're also seeing that volume delta is currently quite neutral. And so we're consolidating on this bottom support at around $3. But whether this is actually about to be a reversal here at natural gas, whether we're actually having upside potential at this point, or whether a downside movement might be happening next, that can only be answered by taking a look at the fundamentals and macroeconomics. And so if you have a look at the repurchase agreements at the repo market, which is really important to actually understand the liquidity condition, then you do see quite interesting things happening right now. Whenever you do see those spikes to the upside, you actually see repurchase agreements being purchased by the Federal Reserve in the temporary open market operations. In other words, you do see liquidity injections, short-term liquidity injections. And whenever that is actually happening, that actually preceded the many recessions that we've seen happening in the past few decades. We've seen it happen here previous to the great financial crisis, but also, we've seen it happen here before the COVID crash, and we are currently seeing that development again. And so, as you know, we are quite concerned about liquidity at all times. We do always like to take a look at the liquidity conditions because we believe that those liquidity conditions are the main drivers of those business cycles that are ultimately driving natural gas. And so if you like this approach of taking a look at the past cycles and learn from them, please make sure to subscribe to our channel and like the video so you don't miss future update videos, and also support us for our work here on YouTube. Thanks for your support. Now let's continue by taking a look at the natural gas weekly chart. And as you do see, we are having cycles. And obviously there are also cycles concerning weather and wintertime and summertime. But it's really important to note at this point that those bottoms have not always coincided to be in summertime, when the demand for natural gas is fundamentally lower because of the warmer weather conditions. But we've, for example, seen that bottom here in February 2016. And so this really underlines our thesis that we do see those liquidity-driven cycles here at natural gas. And if you now have a look at the copper to gold ratio, what you're seeing happening right here is also quite interesting. Because whenever we've seen those bottoms here at natural gas, that has actually been preceded, obviously, by a bigger bear market here at natural gas. But before that, we have also seen that divergence here, where you have seen a rally at natural gas coinciding to copper actually weakening against gold. Whenever that happened, a massive sell-off followed, as we've seen it here, for example, in 28. We've also seen that happen, for example, here in 2011. We've seen that divergence happening. We've seen that leading to a massive sell-off at natural gas. The same thing goes for 2013, 2014. A massive sell-off followed after that divergence, and so on and so on. So you really do see history is repeating itself, right? Now, which is really interesting at this point is that we can actually have a empirical viewpoint at this point, because those bottoms are always having a certain distance from each other. We do see that the first cycle here on the chart is 951 days, the second one is 1421, and so on. And if you take a medium level at this point, I mean, the high point is 1,500 days in this cycle between 16 and 2020. And so a cycle is also always roughly around 1,200, 1,300 days long. You tend to see shorter cycles, you tend to see longer cycles. Obviously, that's highly specific. and we're currently seeing a 736-day period since the last bottom here in February 2024. And so roughly 2 years passed, and we do tend to see those kind of 4-year cycles. And from the cycle perspective, that would obviously mean we could see that this can go on for quite a while. Now, at the same time, we are having some arguments at this point that we might see this being a shorter cycle, as we've seen it happen, for example, after the great financial crisis, because we are already seeing underlying weaknesses here. And those weaknesses are essentially that we've really seen a big weakening at the copper to gold ratio. Historically, those really marked those massive downturns that we've seen, and this negative correlation or this divergence that we've seen happening here for natural gas and the copper to gold ratio is now actually basically visible for quite a while. Now, if you have a look at the DXY, you can actually understand a lot more concerning the natural gas cycles. If you have a look at those bottoms again, you do see that a lot of those bottoms actually coincided with a strengthening of the dollar. Sometimes that has been happening way before the crash happened or way before the bottom was in. Sometimes that actually the top at the dollar actually has been after the bottom at the natural gas price has been in. But essentially, whenever the dollar strengthened again in history, that actually marked massive bottoms at natural gas. And as we are currently retesting this historically important trend line in blue, obviously that would suggest we might see a reversal coming up next here at the DXY. And so those are all empirical evidences that we've just assessed that do speak a bearish language. Obviously, it's quite hard to predict whether we're about to see a continuation here in this upwards channel or whether a downturn to below this blue channel might be more likely. But at the same time, we do have those empirical evidences, and we at Kronos believe that the downside potential is definitely in existence. And as the dollar might strengthen in the next few months, as we are seeing liquidity is actually tightening, we've also discussed that in the latest few videos. As liquidity is tightened, as credit is actually decreasing, as the money supply is contracting, that tends to always put some upwards pressure on the dollar, on the DXY, and that's what we've seen happen historically. And therefore, we are quite concerned about the upwards potential here at natural gas, concerning the divergence that we are seeing here, also concerning this ratio between copper and gold. Historically, we're currently nearing or getting nearer to this time period where cycles tend to end. We're now already in 736 days. And we have definitely seen cycles being around 950 days long. And so we are quite concerned. And so as we actually assess new data, we're definitely about to share that with you. And so if you don't want to miss that, please make sure to subscribe to our channel and like the video so you don't miss future videos, and also support us for work here on YouTube. You can also join our Discord server, which is also linked down below. Thanks for your support. See you the next time. Bye bye.